Hey traders, what's happening? Jamie Saettele here. It is March 17th, 2020, St. Patty's Day, and I'm going to do a quick video to show you why I think we've got, call it a third wave low, tradable low in place in the U.S. equities market. So first off, let's actually look at the NDX cash. All right. All right, so we've got this channel, right? Shorter term, or not shorter term, but back to 2011. There's a much longer term one on here, but this is the one we care about at the moment. So we are putting in a little reversal day here, right? Yesterday in the post, I was noting that we could take out maybe that low from June and then reverse higher. We didn't do it in cash. We did do it in futures, right here. Okay, and you can see the channel that we held here as well. So good spot for a low. Now what I'm going to do is I'm going to zoom into a 60-minute chart, and we're going to look at the S&P because it's quite clear from a wave count perspective. So first off, I've got a wave, a 1-3 line drawn. So you extend it off 2, and that will estimate your wave 4 resistance. And as I always like to do, Elliott himself used to count the waves on hourly closes. So you can see how clear this is. You got wave 1, wave 2, and then wave 3 down, which is 5 waves itself. 1, 2, 3, 4, 5. Okay? Look for a wave 4 rally. Really, it could be, it's all you care about is really kind of this line here, but it could be anywhere on that line. So it could be really anywhere between 27, 30 or so, or maybe even 26, 20, 26, 30, depending on what the form of it looks like. If it's very sharp, right, then we're looking towards the upper end. If it's very shallow, then we're just talking about correcting this drop through time. Another thing to watch is I would watch the 200-hour average on S&P futures. That's going to be at this point around 2,700, and on a daily chart here, that's also the center line, right? We talked about this last week, but this is ultimately the big setup, right? You get your zoom through the median line and then your retest back into it, right? And that's going to be, again, depending on how quickly we get there, if we get there, you're talking 2,700, and obviously decreasing slightly each day, all right? I'm going to move into another chart here. Another reason to suspect the low is Dow futures, right? We just made a 4-hour volume reversal. That's the first one since 228, which would have been your last, decent tradable low. So that supports the idea of some sort of a low, tradable low in place. And here's a little trick as well. If I look at S&P futures, you can see the low hour, which was actually from yesterday. On the open, you had limit down, right? So that close of that hour was 24.35.50, right? We call it hourly reversal support. So look across the chart, put just a horizontal line on it. That was actually support last hour. So you might actually have a low in at last hour's low, okay? As far as risk is concerned, because obviously it's pretty big. You're talking about 150 plus points to the low down here. You probably aren't going to be using 150 point stop. So yeah, idea is we have a tradable low in place and looking up towards, again, 2730 to 2630 over the next couple of days, and then we will see what happens up there. All right, that's it. Take care.